Be Wealthy and Smart, episode 567.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the real estate market and the fact that April home sales dropped. Now, that's not a big thing for the month of April. It was only down 0.4%. But when you look year over year, it's over 4.4% that home sales have dropped. That means fewer homes are selling and homes are staying on the market longer. It's a little bit concerning because we had a significant pullback in interest rates. So with interest rates lower, we would have expected higher sales. But maybe not if prices are topping out and real estate continues to get a bit weaker. One of my data points for that is that this was the 14th straight month of annual declines of existing home sales. So we definitely have a trend here for more than a year that sales have been declining. The market is definitely softening, although again, it's hard to generalize because different pockets of the market are doing better than others. But we definitely can see an overall trend of the real estate market softening. So I'm going to share with you this article from CNBC called Home Sales Fell in April Despite a Big Drop in Mortgage Rates. This was written by Diana Olick, and she has three key points. The first is a sizable drop in mortgage interest rates didn't do much to help home sales in April, as high prices and tight supply at the low end of the market continued to sideline buyers. Second key point, sales of existing U.S. homes fell 0.4% in April compared with March to a seasonally adjusted annualized rate of 5.19 million units, according to the National Association of Realtors. Sales were 4.4% lower compared with April of 2018. And the third key point, that was the 14th straight month of annual declines. And the article says, a sizable drop in mortgage interest rates didn't do much to help home sales in April as high prices and tight supply at the low end of the market continued to sideline buyers. Sales of existing U.S. homes fell 0.4% in April compared with March to a seasonally adjusted annualized rate of 5.19 million units, according to the National Association of Realtors. Sales were 4.4% lower compared with April of 2018. That was the 14th straight month of annual declines. Existing sales make up about 90% of the total sales market, as new construction continues to lag historically normal levels of production. The NAR's reading counts closed sales, so it reflects buyers out signing contracts in February and March. The average rate on the 30-year fixed dropped sharply in March, so the expectation had been for a gain in sales, but the Realtors' chief economist said he is not concerned. First, we are seeing historically low mortgage rates combined with a pent-up demand to buy, so buyers will look to take advantage of these conditions, said NAR's Lawrence Yun. Also, job creation is improving, causing wage growth to align with home price growth, which helps affordability and will help spur more home sales. The median price for an existing home sold in April, including single-family and condominiums, was $267,300, a 3.6% annual increase. Prices have been gaining year over year for 86 straight months. The gains have been shrinking, however, since last summer as more inventory comes on the market. They overheated dramatically over the past few years, however, and some major metropolitan markets are still overvalued and prohibitively expensive for entry-level buyers. The inventory of existing homes for sale increased to 1.83 million, up 1.7% annually, to a 4.2-month supply at the current sales pace. Homes sat on the market for an average of 24 days in April, down from 36 days in March and down from 26 days a year ago. Slightly more than half of the homes sold in April were on the market for less than a month. We see that the inventory totals have steadily improved and will provide more choices for those looking to buy a home, Yoon said, adding that sellers have to realize that price growth has moderated. When placing their home on the market, some sellers need to be very realistic and aware of the current conditions. While more homes are on the market, part of the increase is simply that it is taking longer overall for homes to sell. As they sit on the market, supply swells. The new supply is not, however, changing forecasts for future sales. Our outlook for the housing market remains largely unchanged, wrote Sam Cater, Freddie Mac's chief economist, in a monthly report. We still expect stronger home sales and housing starts in the coming months due to favorable market conditions and accelerating wage growth. Regionally, home sales in the Northeast decreased 4.5% to an annual rate of 640,000. The median price in the Northeast was $277,700, up 0.9% from April 2018. In the Midwest, existing home sales saw relatively no percentage change from the prior month, as the annual rate remained $1.17 million, which is 7.9% below April 2018 levels. The median price in the Midwest was $210,500, an increase of 5.5% from a year ago. Existing home sales in the South dropped 0.4% to an annual rate of $2.27 million, down 1.7% from a year ago. The median price in the South was $236,800, up 4.4% from a year ago. Existing home sales in the West rose 1.8% to an annual rate of $1.11 million in April, 5.9% below a year ago. The median price in the West was $395,100, up 1.3% from April 2018. End of article. All right, so there you have it. Fewer homes are selling, they're staying on the market longer, and home sales are down about 4.4% year over year. But needless to say, in some parts of the country, home sales are doing better than in other parts, and appreciation is happening the most in the Midwest, up 5.5%, and in the South, up 4.4% in terms of prices. But the Northeast is looking rather weak, with their prices up 0.9% in the last year, and out West, with home prices up 1.3% in the last year. Again, that's a broad generalization. There's different markets that are still doing better than others, but we continue to hear people moving out of New Jersey, people moving out of Connecticut, people moving out of California, moving into Texas, into Washington State, into states that don't have a state income tax, such as Florida. Those states tend to be benefiting, and in general, states that do have a high state income tax are still suffering. One thing that real estate has in its favor is the fact that the Fed has said they're not going to raise interest rates this year. That's a huge help to the real estate markets. And since interest rates are still very low, it should continue to support the markets, even though in some markets, prices have gotten extremely high and have been outpriced for the entry-level buyer. I will put a link to this article in the show notes and on my website in case you want to take a look at it. And if you haven't yet subscribed to Be Wealthy and Smart, hit that subscribe button and you'll be updated as soon as new podcasts are available. And remember, the full podcast library is available to you. I'm getting lots of compliments on one of my podcasts called How to Be Savvy with Debt, which has really been eye-opening for some listeners. That's podcast number 471. And also, if you are struggling with credit card debt, I suggest you listen to podcast 430, The Debt Diamond. Pay off debt cheaper and improve credit scores faster. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.